cost. And according to lowest cost, this is the lowest hours as well, right? So the high-low method says that the variable cost is equal to change in the variable cost divided by change in units, high-low units. So highest cost give you 9,800 minus 7,800, right? 7,400 divided by highest units minus lowest units. It's going to give you 2,400 divided by 400. Answer would be 6, right?
Sorry, sir. This is for finding what?
Variable cost per unit.
Variable cost per unit.
Right? The high-low method is basically gonna help you to find out variable cost per unit. And when you find out the variable cost per unit, use the mixed cost formula, you will find out the rest of the things. Right? How? Let's talk about that. So we know that the total cost, which is a mixed cost, is equal to, okay, let me solve it here so it would be easy for you. Okay, you can take either of the cost and their variable units. So then we will be finding out. Let me clear all this mess here. Clear all drawings here. So total mixed cost or the mixed cost is equal to fixed cost plus variable cost per unit multiplied by the quantity. So we take either of this. So we know that 9,800 was the mixed cost. Fixed cost we don't know yet. We find out that the variable cost is 6 and the units was 850. So can you find out the fixed cost? Rearrange the equation, you can find out. Or if you are taking this 7,400, if you are taking this, 7,400 would be fixed cost plus 6 multiplied by 450. So total cost, fixed cost you can easily find out. Either you can use this or either you can use this. So let's go back to our discussion here. So we pick here 9,800. So 9,800 is total maintenance cost, which is a mixed cost, which include the fixed cost plus variable cost, total variable cost. So you rearrange the formula to find out the fixed cost and total variable cost. How we can find out that? Through this formula, 6 multiplied by 850. So answer going to be 4,700. Either you use this or either you use this. Answer going to be, because fixed cost remain fixed irrespective of these hours, answer going to be this much. So through high-low method, you have successfully segregated its fixed part and its variable part, right? The method name is a little bit fancy, but the logic is pretty simple, right, Coco? Subhan, Junpyo, understand?
Okay for me, sir.
Subhan, Junpyo?
Yes, sir.
Yes, sir.
Good. So we can also develop the equation method like that. A plus bx. A is a fixed cost. So fixed cost we find out 4,700. B is your variable cost per unit, and this is the amount of hours. So you can easily develop this equation for the rest of the thing. Even if the hours are in between 851, 900 or 500, you can easily find out what will be the total mixed cost, right? You can extrapolate that as well. So if you understand the high-low method, please answer this quick check. Solve right now. Let me read it for you. Sales, salaries, and commissions are 10,000 when 80,000 units are sold. 14,000 when 120,000 units are sold. Use high-low method, and what is the variable portion of sales, salaries, and commission? It means what you need to find out? Variable cost per unit using high-low method. Junpyo, you look surprised.
On B.
Oh, good. How you find out the B? Highest cost minus lowest cost, right? Divided by highest cost units, 120,000, minus lowest cost units, which are 80,000. So 4,000 divided by 40,000. 4,000 divided by 40,000. Answer going to be B. 0.10. Okay? If you understand the B is correct, then what is the fixed portion? Can you find out? Find out. Subhan, what is the answer?
Is it C, sir?
C.
Yeah.
Coco? Subhan, C is not the answer. Because you can easily say that the total mixed cost is 10,000. And of course, the variable portion would be less than 10,000 and fixed portion would be less than 10,000.
A.
Yes, A. Subhan, not B. You have the pen pencil, you can use that easily. Very nice. We find out that variable cost per unit is,
No, sir, I know the variable, but I forgot fixed.
in our previous question, we find out that the variable cost per unit is 0.10. You can use either of the one. Okay, let's talk about this one. 180,000. When 180,000 were the units, mixed cost, total cost would be 14,000. So 14,000 is the total cost is equal to fixed cost plus 0.10 into units or 120,000. So 14,000 is equal to fixed cost plus 12,000. To rearrange it, answer gonna be A, Coco, right? Good. So are we clear about the high-low method, right? the use of high-low method to find out the fixed cost portion and the variable cost portion. Now, our fifth learning objective is prepare income statements for merchandising company using traditional and contribution margin format. So traditional format, we already know through accounting, sales minus cost of goods sold, gross profit minus selling and admin, we find out net operating income, and then taxes and interest, we find out the net income. So let's talk about the contribution margin approach. So we have here the traditional format, sales minus cost of goods sold, we have gross margin, and then selling and admin, we have net operating income. But if you make income statement through contribution margin approach, then we make sales minus variable cost. Sale minus variable cost is called contribution margin. And then we less fixed cost, we find out net operating income here. So you can say that, sir, if the answer is net operating income, both are the same, then why not we can use our traditional format? Why we are using this one? So remember, this traditional format is for external reporting. So all over the world, the format is the same. So if a person is in UK and the company's income statement belongs to of the company from Japan, he can easily understand, okay, total sales, cost of goods sold, gross margin, selling and admin, and then net operating income, right? So it's a standardized. But contribution margin format approach is mostly used by managers, internal people, internal management system, and it helps you to control the cost, set the prices, and set the how much quantity you need to sell. We'll have a complete chapter we call this CVP analysis, cost, volume, profit analysis. We will discuss extensively over there. But the beauty of this contribution format approach is that